Before we start, just understand this is not a signal service. Everything you see here is for educational purposes only. Trading involves risk, and the goal here is not to follow trades, it's to learn the process behind them.
Good morning, good morning. Is that thing blurry or is it just me? It's blurry. It's blurry, it's blurry. Psych. Still look blurry now, I ain't gonna lie. We just gonna have to take it for what it is today. It needs to focus. Good morning, and welcome to I'm the Trader Capital live trading for law. It's Tuesday, June 2nd. All right. First and foremost, before we get into anything, all glory to the Most High God. All right. Let's bow our heads for a quick prayer. 1 second. All right. Our Heavenly Father, we thank you for your grace and your mercy. We thank you for another opportunity to try again, to learn and grow in these markets. Father, we ask that your will be done today as it is in heaven. Father, I ask that you give us the heart of a giver and make us a lover of our neighbor. Please let me not lead anyone that listens to me astray, but use me as a vessel to bring your children back onto you. In Jesus' mighty name we pray. Amen. Can the church say amen? Amen. Let's begin. Before we jump into the charts, I just want to say this. There was a time I used to sit down on the charts with no real plan, jumping between strategies, losing, blowing accounts, second guessing every entry, and honestly just hoping that the trade would work. And that's where most traders are today, not because they're not capable, but because they don't have a structured process. The biggest pitfalls that causes traders to fail is that they have no knowledge on money, they don't know how to lose, they don't know how the markets operate, and they don't have a winning model. 90% of traders fail, all 90% are plagued with one or more of these pitfalls. Today, I'm going to show you the 3 pillars that every trader must have in their trading to survive and thrive in the financial markets, so you can join the 10% who succeed and fast track your way to the top 1% of the wealthiest people on this planet. It's called the 10% to 1% club. Let's go. Woo! But before we dive deep into the 3 core pillars, when you step into this arena, on this battlefield, you must first have 2 crucial realizations. Realization number 1, trading is war. This is not a get rich quick scheme. This is the hardest thing that you'll ever do in your life. Realization number 2, all traders are money managers. As a trader, your ability to manage money is vital to your survival in this industry and in life as we know it. Most traders think that success in the markets comes from finding the perfect strategy or catching the biggest moves. But the reality is, trading success is built on 3 core pillars. First is money and mindset. This is the foundation of success. Then is risk management. This is the holy grail of trading. This is what will keep you in the game long after everybody else has quit. And lastly, we have trading edge. This is where all traders start. I know this because this is where I started. That's why in today's session, we're going to hone in on your trading edge. Now, everything that we do here is built around one thing, and that is confidence in your trading edge. And at I'm the Trader Capital, our confidence comes from 3 things. First, it comes from understanding how the market actually operates. Not what social media says, but how money truly moves. Second is having one trader model. One model with IPDA signatures that we trust and execute on a consistent basis. Third is having a plan and a process, because without a plan and a process, you're just reacting to price and you're winging it each and every time. And this right here, this session, this is where we focus on the 3rd piece, the process. So many people lose confidence in trading and in life because they simply don't have a plan. There's no process they're following. There's no procedures and protocols that they're abiding by. They literally are just winging it. And they wonder why they can't get consistent. They wonder why there's ups and downs in their equity curves. They literally can't figure it out. The uncertainty of not knowing exactly what you're doing, how you're doing it, why and when you're doing it in the market will cause you to fail in trading. Confidence and certainty are key if you want to be successful in trading. And it's your responsibility as the trader, as the analyst, As the fund manager, it's your responsibility to attain that confidence, not only in your model, but also in your processes. So what I want to do right now real quickly is I want to share with you the process that we teach all our analysts at I'm the Trader Capital, and then we'll see that process live in action. This is the 3-step trading process. Step 1, condition. This is where we determine our bias. Before we even think about entering a trade, we need to know the market program. Are we in a buy program or sell program? This is where the market shows its hand. Then we have step 2, stage. This is what sets up your trade and what does your trade look like. There are 2 types of trades, retracement setups and continuation setup. Then we have step 3, execution. This is how you're going to enter, manage, and close the trade. At I'm the Trader Capital, we have 4 entry criteria before executing. I'm not here to force trades. I'm here to execute my plan step by step in real time. All right, let's get into the live trading flow. Now, as you're watching, don't just look for entries. Pay attention to the process behind the entries, because this is what will get you into the 10% of traders who succeed. And if you want to go further to the 1%, well, that's where we break down all 3 pillars inside of the program. I used to think that winning trades built confidence, but it's not the wins. It's knowing exactly what you're doing, when you're doing it, how you're doing it, and why you're doing it before, during, and after each trade. And that is what we're building here. Let's begin with our daily trading processes. All right. Oh, why is this showing already? weekly target going to this week is 3%. Mental check-in, feeling generally okay. All right, excited to see what price action has in store for us today on this NFP Tuesday. Excited to continue to grow, all right, and get 1% better in these markets and these charts. I just feel like I'm growing already. Each day that 1% is compounding, and each week that 1% is compounding, and I'm kind of getting to the point where I'm enjoying price action. I'm enjoying seeing what I'm looking for and seeing it pan out, even when it doesn't pan out, right? That's fine. There's nothing wrong with that. Losses are the only thing, promise. So excited to continue, excited for the future. Yeah, let's carry on. I accept any risk that comes with trading today. I understand that trading comes with real risk and that losing is part of the battle. News is NFP Tuesday. All right, we have medium impact news coming out at 10 o'clock. That's the only news today. Cool. We have news still. All right, making an optimal day to take a trade. All right, risk going into today, we're still at our lowest leverage. All right, we're at 0.25 of account size, and we have a max of 0.75 on the day, all right, per account. Weekly program hasn't been established yet, but let's go ahead and see. Let's review price action overnight to see if we can establish a weekly program going into today. Father set me free from the shackles of my. All right, so we have Monday's range. We've got Monday's range. All right, as you can see, we haven't taken either side of Monday's range yet. Okay, so we haven't established a weekly program as of yet. Let's go ahead and adjust our higher time frame dealing ranges. 20-day gets adjusted. We moved the low as well. All right. It's constantly shifting. All right. The market's constantly moving, so we have to move with it. Right. We have to adapt and move with it. It's a living, breathing thing. These markets. They're living. They're breathing. They are alive. All right. Got that situated. And we can carry on. We'll go ahead and review yesterday. Review price action yesterday. We got a little bit of time. Today we can go ahead and review price action yesterday. I did take a trade. It wasn't PM session. It was towards the end of lunch session. It was 12:50 macro. Yeah, I believe it was 12:50 macro. I thought I switched accounts, but clearly I didn't. Took 2 trades on that same account. It's not something I want to be doing, but I didn't realize when I entered the trade that I was still on the same account from this morning, but it's all good. I missed the 1250 micro setup. It was still fun to watch it though. Still fun to watch it. I also missed this setup too, but that was nice. Whew. That was super duper nice. Nice to watch. Nothing for 250 macro for me. 150 macro as well. There was nothing there. But this was the setup I took yesterday. I think I posted it. What's up with this internet, bro? Bro. Yeah, this was it right here. 1250 macro, all right. It was a continuation buy, all right, buy. We came back below into external liquidity, into inefficiency, all right. Market structure shift back above that external liquidity. This was previous week's high, 20-day high, and also happened to be previous day's high. We also had lunch session open range buy side above price as well, which we took by market structure shift back above, entry there. Gave me 3 contracts. I took 2 of a -1 and the remainder of a -1.5, and that was that was this setup right here. Okay, as you can see, it gave us more than we bargained for, but that's for later on. All right, that's for later on. We'll take what we can get for now and keep it pushing and feel no type of way about it. All right, right now it's just about the process, showing discipline and following the process, and the outcome we don't really care about it right now. And not moving forward, we won't even give a damn about the outcome. Really, it's mainly about, we're process orientated, all right, process orientated over outcome focused. Okay, we don't really care about the outcome of the trades. It's about whether we followed our processes, procedures, and protocols. Anyway, let's get into today. All right, different day, different market condition, different candlesticks, same processes, same procedures and protocols. All right. Step 1, all right, we have to determine a condition, all right, which is determine a bias. All right, before we even enter the market, we need to know the market program, right? Like we talked about the process, the 3-step process that we teach all our analysts at the Trader Capital. All right, if you were using previous day, actually I didn't even I don't think we took previous day yet. No, if you're using previous day, all right, you wouldn't have established a condition already. All right, you'll be waiting just like everybody else. All right, but for me, I use the daily. All right, so I go from 12 a.m. to current price action. Got the wrong thing again in it. Caught myself. I note the lowest low to highest high. Bloody hell, if it lets me. Lowest low to highest high, just like that. Give us our dealing range. And we wait for one side of that dealing range to get taken, all right, to establish a condition. So we wait, right? We wait for the market to tip his hand to us, and then we make our move, all right? We're not just blindly jumping in. We want to let the market let us know, hey, this is what I'm going to do today, all right? So prepare for that, right? A couple seconds until we kick off. Ding, 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 ding. Look at that open range gap. I'm not really anticipating much from this price action today. All right. I'm going to need a whole lot more of, like, it needs to slap me in the face for me to engage in this market, because look at that open range gap. It's non-existent. You know what that means? That means that price action ain't going to be all that great today. It ain't going to be all that great. Really and truly, I'm not excited for this price action. This is the same thing that happened to me last week Thursday. All right, so this is another day where I get to collect data on seeing a tiny ass opening range gap. All right, and paying attention to the price action and how they behave. Okay, But anyway, above dealing range, we got previous day's high. Okay, we also have 20-day high as well, and above that, it's all-time highs. Yep, that's all-time highs. Nothing else above that. Okay. Below dealing range now. Below dealing range, we got Asia session sell side. We also have that's AM session. We also have AM session. You have AM session sell side. We also have lunch session open range sell side below price. Only was set me free from the shackles of mine. I think I don't want to see these on the M15 time frame really. I want to see it below M15. But for now, I'll leave it alone. See what it do. Hold on. I just want to confirm something. I see this here on the supporting time frame. I'm watching the sell, retracement sell right here on the supporting time frame. I'm paying attention to it. I could do my stuff cause baby I'm in different house, different location. And there's no denier, nobody right. Me a day on top. Price with many time we shop. Yeah, there's no way. This is from Monday. Now we snagged that. Yeah, that's what we based that thing off anyway. We snagged that bad boy. I ain't even gonna lie. We also didn't take this, really and truly left it open. Give me the money. Over the fame. Over the fame. Like I said, I'm not really anticipating much from this price action this morning or today in general, to be honest, just because based on that open range gap. Okay, I've seen this too many times. So I'm not really like in a rush to get into anything, really and truly. Right now I'm watching this retracement set up based on previous week's high. Doing its thing. Give me the money. Over the fame. Over the fame. See what we've done. I'll be wallpaper, ready to leave this life. Think about exit chat, you know. It's Trading Edge Tuesday. It's Trading Edge Tuesday. It's Trading Edge Tuesday. Where we get you confidence in your trading edge. Alright? This whole session, alright, every day is meant to get you, build your confidence in your trading edge. But today specifically, we dive deeper, alright, into understanding how the market operates, okay, having one trading model, alright, and having a plan and process that you follow every single day, alright. TP Tuesday. TP Tuesday? What's TP Tuesday? Shit, inform me, because me not know. Trading edge Tuesday. But I guess we're going to be hitting TP too. Take profits. Take profits. Take profit Tuesday. Is that what you're saying? Inside of dealer range, actually, we do have liquidity. All right, we have London session sell side. Let's get that on there. Which we're grabbing right now. Grabbing, which we're raiding right now, I should say. We ain't grabbing it, we're raiding it. See what we've done. Like I said, I'm not too eager today, all right? Price action, it might not be that good. TP Tuesday. Is that how you spell enticing? I don't know if that's how you spell enticing. But that last word is supposed to say enticing. I don't know if I spelled that right. But I don't get paid to spell. Me not like that open range gap is practically non-existent. And when that happens, all right, usually price action isn't really that clean. For me personally anyway, all right? If you see something clean, then, don't let me stop you. You know what I mean? You know what I mean? If you see something clean, don't let me stop you. I'm looking for something clean. It has to be top of the top. A plus setups today, right? I'm not taking any A minus, B minus setups today. It has to be A plus plus plus. Just because of that non-existent open range gap, all right? It's a subtle indication of how price is going to behave. Based on my data that I've collected, all right? No! We only taking A plus today. If you don't see A plus setups, don't take it, all right? Don't do it. I am watching this retracement sell here. Seems to be doing its thing. Right off the bat though, nothing for me, really and truly. Oh, I didn't set my alerts, did I? It's Trading Edge Tuesday. Over here, I'm the trader capital, right? Our confidence in our trading edge comes from three things. First, it comes from understanding how the market operates, all right? Like I say, not what social media says, not what's out there on the internet and what people are saying and all that. That's not how the market operates, right? There's a rhyme or reason behind why these candlesticks print the way that they print, and that comes from understanding the who behind money. Okay, we talked about yesterday the who behind money. Well, we didn't specifically talk about the who behind money yesterday, but money and mindset when we talk about the who behind money, right? Who's behind this? Central banks, right? Money, the thing that we know as money, the concept that we know as money is their asset, is their commodity. They own it, they control it, and they set the price of it. All right, they control it. Okay, when you translate that into the markets where they're actually controlling the money supply in the economy, all right, they're controlling the money supply. They're controlling the money supply in the open market. Hello? All right, these markets are controlled, all right, to the tiniest degree. Okay, if it wasn't, then everything would be collapsing, right, with people just buying and selling randomly, right? It's not random. Nothing here is random. All right, I'm trying to give you that red pill. Take the red pill, Neo. Take the red pill. Come out the matrix. Anyway, yeah, you have to understand how the market actually operates, and it comes from understanding the who behind money. Okay, then you have to have one trading model. As technical traders, which we are, right? We're technical traders. We only need one pattern, one setup, all right, to rely on to trade. Really, we don't need multiple, right? When we first step into this industry, we jump from strategy to strategy. I know because I did it. Nobody's special in this industry, right? We all come into this industry thinking that we're special and we're gonna be the one to make millions in a couple of months or weeks. Like it doesn't work like that. We all go through the same journey, the same path. You listen to all successful traders, it's the same journey they all took, right? The same journey, right? We jump from strategy to strategy thinking it's because of the strategy why we're losing, but that's not the reason, right? You can flip a coin, and as long as you have the holy grail of trading, which is risk management, which we'll talk about more tomorrow, right? Which risk management, right? You're going to be successful just flipping a coin. Heads you buy, tails you sell. As long as you manage your risk, all right, you're going to be profitable, right? It's not about the strategy. But anyway, you need one pattern, one model you're looking for, right? Master one. Master one, if you want to add more to your arsenal, that's fair enough, but you have to initially master one setup, one pattern, okay? And then you have to have a plan and process, right? Successful trading is boring, right? We're doing the same thing over and over and over again. It's like your job, right? Once you start a new job and they train you on what you're doing, the days might be different, right? You might encounter different people, different actions, but what you're doing, the core foundation of your job is the same, right? That doesn't change. And that's the same mentality, the same aspect that you need to have in your trading, right? You need to have a plan, you need to have a process that you're following, right? You need to have procedures and protocols that you're following. You need to control yourself, right? And that's how you do that. Setting limits, setting plans for yourself, setting procedures and protocols. Hey, if this happens, then that, right? Because that's how this market operates. It's operating on an algorithmic theory, okay? If this, then that is code, right? These candlesticks, they're following code. It's AI, all right? AI has been AI, and since we even knew about AI, all right? Ever since the market went to electronic trading, all right, it's been controlled by AI, all right? AI, all right? It's controlled, folks, all right? I just want that to be clear. It's controlled, all right? It's doing these things with a reason, right? With a purpose behind it. And we're going to get deeper into it today. Yes, A plus only today. A plus only. A plus only. Anywho. Sorry about that rant. Sometimes you just have to emphasize things so people can, open their eyes, open their minds, because we're all just in this matrix, this trap, just stuck, just thinking that oh, the world is not fair. Yes, the world is not fair, right? It's not fair. Everything is rigged, right? What makes you think that the biggest casino on the planet isn't rigged, isn't being controlled? Like, come on, man. It's a zero-sum game. Zero sum. What that means is that for me to lose, all right, somebody is winning. Every time I take a loss, somebody is winning. Every time I take a win, somebody is losing. Zero sum, right? There's no, oh, we're all winning here. And not everybody wins here, all right? This game wasn't made for us to win, all right? It wasn't made for us to make money here, okay? Just open your mind and understand that it's controlled, right? Once you understand the who behind money and how they control the money, control. It's all about control, all right? It's all about control. That's why it's imperative, right, that we get control of our finances, control of ourselves initially, right? Control of our finances, just control your environment, right? That's what it's all about. Because if you don't control it, somebody else will control it for you. And you don't want that, right? Not everybody has the best intentions for you, right? So you don't want to be controlled by somebody that doesn't have your best interest at heart, right? Nobody's going to care more about yourself than you are, all right? So you have to be the driving force behind your life, okay? All right? I don't mean to preach and preach, but you know what I mean. Da 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 da. What are you talking about? What am I gonna be sorry for? Oh, when I apologized. So far, nothing for us to do here. All right. We haven't established a condition yet. Even if you were using previous days, you still wouldn't have been established a condition yet. All right. Waiting for one side of dealing range to get taken, or right, if this then that, right? If this happens, then I'm going to do this. But if that happens, then I'm going to do this. That's how we need to be operating here, because that's what I was talking about. It just came back. All right. It's an algorithmic principle, right? It's code, right? When it comes to coding, this is how you tell the AI, hey, if this happens, then I want this to happen. And that's what IPTA is following, right? They've coded it to say, hey, if you see this, do that. But if this happens, then do this. And that's the same way that we need to approach our processes, our procedures and protocols, right? If this, then that statements, right? So for me, right, if one side of the dealing range gets taken, right, that will establish for me a condition. Then I'll be waiting for a retracement setup or a continuation setup, right? If this, then that, right? That's how you need to structure your processes and your procedures when you're in these markets, okay? Hold on. I was trying to make sure that I had the right PowerPoint here. That this is the one that I want to do. I want to use, because this is yeah, this is not the one I want to use, really and truly. Yeah, this is not the one. This is the I'm putting together like it won't be weekly. Well, it will be weekly live training PowerPoint. Okay, this is I think this one is that. I'm not sure. It says for the live trading floor, but this is not the one I want to use today. Let me find the one I want. There's so many. Oh, what was I using the other day? Remember, and I had went through the ting. Hold on. Give me a momento. Uno momento, por favor. Oh yeah, this is the one. Alright, okay. Oh yeah, I was on the wrong one. I don't have the thing on here though. No. I did say I wanted to change that one. But anyway. We got the wrong thing, so just bear with me 1 second while I get the right thing on here. It's the 5 minute. It ain't even 5 minute though. I need to adjust. Well, I need to change, not adjust. I need to edit all of these. 950 macro. I need to fix these things. You know what I mean? No, this is not the one. Not the 2. Not the 3. Bloody hell, this is tough. Yo, I just changed it though. Ravi. Bruv. What is happening right now? what we done to the world. Just for today, because I don't like that open range gap. Okay, I'm on the right account. I don't mind trading this account. This is like my, it's already in drawdown, so it's like my least favorite account to trade on a day like this anyway. Particularly, I don't want to risk, giving back my profits on the other two accounts. So this one is fine to trade on. It's like my more relaxed account just because it's in drawdown. But obviously, my job here is to get out of drawdown. Thank you. Are we on the right thing now? You're gonna do what I want you to do now? Thank you. Thank you very much. Bear with me, folks. Bear with me, folks. Please, 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 please. Have some patience with your girl here. Please, 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 please. Please, please, please. Please, please, please bear with me. Bear with your girl. Bear with me. Bear with me. All right. All right. We're heading to dealing range buy side here. Okay. About to smack it, smack it, smack it. Above it, okay, like I said, we have, whoa. Whoa. Is that accurate over there? Bear with me, let me just double confirm. But today we're talking about trading edge, all right? Building confidence in your trading edge, all right? And how you need to be approaching how to build confidence in your trading edge. Something wasn't right there, you saw that? I just, once you know these things, right? You just know something ain't right. You know what I mean? Like, what happened to this thing? Why did it adjust itself? What is happening right now? So understanding, all right, first thing you need to know out of the three things in building confidence in your trading is understand how the market operates, okay? Understanding how the market operates. Why do these candlesticks move the way that they do, right? It's not random, okay? It's not based on any retail knowledge that we're taught initially when we come into these charts, okay? It's not based on none of that. Just think about it. We're all taught the same thing when we come into this industry. So why is it that 90% of traders fail? Yes, mainly they're battling themselves, right? Trying to overcome themselves. But the strategies in which we're taught anyway is flawed to begin with, right? So then it just adds more to the weight behind the psychology of our trading, okay? if we're all taught the same thing, right? And you were told that that's how the markets move, then everybody should understand how the market move and we should all be making money, right? But that's not the case. 90% of traders fail. Those are the facts. Those are the statistics. Right? If you step in this industry, you're gonna hear that 90% of traders fail. Why did this black out and stuff? What happened here? Why did it black out? Because I didn't do it. Okay. Okay, we got some light up in here. It's a macro time, all right? So my attention, right, needs to be here right now. So just bear with me. We'll get into the market efficiency paradigm in a sec, all right? Understanding how the markets actually operate and why they do the things that they do, right? First, you have to know the who behind money, okay? The who behind money and how they control it, right? Where they're controlling it. Who, where, how. Who let the who. All right, we're about to smash it. We also have less than 2 minutes until open range is complete, and we'll have that dealing range as well. All right. Thank you very much. Alerts everywhere. Alerts everywhere. All right, so we got step one. All right. We've established a condition for the day. All right, going into today as a buy program because we've taken dealing range buy side. Okay, now we move on to step two stage, right? We have two types of setups that we can anticipate the market to do. It's either going to retrace, all right, and then continue, right? Or it's going to retrace to reverse, right? We can either have a retracement setup or we can have a continuation setup. And that all depends on the price action. All right, we have time. Okay, so we have price, we have time and price. Now we're looking for the signatures around price, okay, to let us know which setup now that we'll be taking. Okay, so for retracement, all right, I want to see a short-term high on the 1 minute time frame get taken, and then the market structure shift back below the external liquidity. Okay, for continuation, I want to see price drop inside an inefficiency below external liquidity or take liquidity below external liquidity, and then the market structure shift back above. All right, let me draw it. Which one would be better? Okay, so for retracement, like I said, I want to see the market do this, take buy side above that external liquidity, which is dealing range buy side, and then the market, yikes, hold on, I can't even explain right now. Like this I would be interested in, but look at that movement there. Okay, it's 10 o'clock. We had our news come out. Bear me, I'll be back on that in a second. Let's get the dealing range. Open range, dealing range. That is not the low is down here. Like I said, I'm not in a rush to do anything right now. Based on that open range gap, all right? Like this would be a setup. This would be a retracement setup, a V-shaped retracement setup. But look at that price action. Look at the candlestick. It wicked it and closed all the way. It's closing all the way up here. That doesn't invite trust for me, especially based on that opening range. Okay, I need to see more than that. What am I looking for? Dealing range. Yeah, I'm not interested here. Any other day, I would be fine to enter here, but based on the open range gap today, this is not something I'm really pretty much interested in. Okay, I'll wait for something else, cleaner and clearer. All right. Not that that's any guaranteed either, but it's not. All right, nothing is a guarantee here. But anyway, for retracement setup, this is what I would be looking for. Short-term high on the 1 minute time frame get taken. All right, we can have the market structure shift on the supporting time frame, which is fair. All right, I back tested it. I'm okay with those. Okay, if you want to do a 1 minute market structure shift below, that's also fine as well. But anyway, market structure shift below, this will be a retracement setup, and then we'll anticipate price to drop into a discount. All right, to then continue going higher. Right now for for continuation, right, using the same external liquidity, which is dealing range buy side right now. Okay, we're talking about the patterns, right? As a technical trader, right, we only need set up one pattern, all right, to enter the market. And for me, this is my one pattern, right? One of my patterns that I use to enter the market. For a continuation setup now, right, I'll need to see price drop down, either still based on this price action here, okay, either into an inefficiency, which would be a fair value gap, right? Or it can also drop down, right, and take liquidity. It's inefficiency or liquidity here for continuation. Then I want to see a market structure shift back above the external liquidity here. If it draws it, and then I'm jumping in. So these are the two patterns that I want to see, right, around this price, this external liquidity, which is dealing range buy side. Okay, so we're waiting for one of these to occur, all right, before we even anticipate an execution, right? We have time, we have price, okay, we're waiting for a swing with displacement, market structure shift, all right? So I'm watching this regardless, right? I'm watching this as a retracement setup, okay? A V-shaped retracement setup. I just don't like how price closed all the way back up here. Just the wick is what happened here. But this is the kind of price action you're gonna get on a day like this, right? Where the opening range gap is just practically non-existent. Okay. I want when we get a decent size open range gap, then you know you're gonna get a decent price action. Okay, but because of that open range gap, right, that's why I'm leaving this trade alone and I'm just watching it. Okay, I need a little bit more than that, than just a wick and a close all the way back up here. Like, come on, man. Does these two patterns make sense? Can I delete them? All right, so for retracement, I'm looking for a short-term high to be taken above the external liquidity, all right, preferably on a 1 minute time frame, all right, and then the market structure shift back below that external liquidity. Okay, then I'm jumping in as soon as we take that market structure shift, all right, price trades to and through it, I'm setting my limits right there. And then for the continuation, I want to see price drop back below the external liquidity into an inefficiency, all right, in this price leg, that would be in this price leg, or take a liquidity, right, short-term low 1 minute, I prefer 1 minute, and then the market structure shift back above that external liquidity. All right, that will confirm a continuation setup for me. So those are my two patterns that I look for, all right, around all my key levels. How do I want to select and delete these. Comprende? Comprende? Right now, I'm so happy that I didn't, choose to engage in that setup. Okay, so happy because look at it now. Ain't doing jack shit. So it would have been on the way to take me out right now. Oh, what I am seeing right now though is that we took liquidity below external liquidity previous week high. Market structure shift here would indicate a continuation setup based on previous week's range. Okay, so I'm watching the market structure shift here for a continuation. Didn't even realize that was happening there. One contract, I don't mind. I don't mind engaging in that if it gives it to me. One contract, Larry. So this is a continuation setup based on external liquidity previous week's high, okay, like we just talked about. We came back below it, we took liquidity, a short-term low below it, all right, market structure shift back above it here. Da-da-da-ba-ba. All right, we're tagged in there. It's out of my hands now. It meets the criteria of everything I'm looking for, so whatever happens, it happens, right? It's out of my hands. 425 right there, sell limit. I got my risk, all right, predetermined already. I know what I'm losing if this trade comes and takes me out, and I'm okay with it. I'm fine with it. I accept it. No qualms whatsoever. Da-da-da, da-da-da, da-da-da-da-da. Yeah, I didn't trust that for the sell, you know. And also, this is in line with my week program hasn't been established yet. It's in line with my daily condition, okay, which is the buy program. I'm looking to be a buyer of this market. So this is in line with our program for the day, okay? So doesn't make it 100% guarantee, all right? It just adds more confluence, which equals more confidence behind the trade, right? All right, now that we're in a trading, there's nothing much we can do really and truly. Okay, let's get back into the topic at hand, which is Trading Edge Tuesdays. We're currently on understanding how the market operates. Okay, so in order to understand how the market operates, right, you have to first understand the market efficiency paradigm. Okay, so let's get into that. So there seems to be a disconnect, right, between people's thought process about how the markets operate and the reality of the market, right? To understand the charts and how these candlesticks move, you must first understand the market efficiency paradigm. Okay, now once I understood this, once I was taught this by my mentor ICT, well, excuse me, cut that out, Michael J. Huddleston. Let's respect the man, all right, and how he wants to be addressed. Once he taught me this, right, it was a game changer for me, right? Once you understand that this is a zero-sum game and somebody is winning while other people are losing, right? So market efficiency paradigm. As traders, investors, and speculators, when we come into this market, right, we're made to believe that we control price, right? That is our buying and selling pressure that makes these candlesticks move up and down. And this is not true, right? This is a lie that we've been told. That is us that makes these candlesticks move around. If it was us, right, the market would have been crashing already, right? By people just completely banding together and buying and selling, right? It would be it will be chaos in here, right? It will be chaos. The fact that it's controlled is a good thing for us, right? It's a good thing, right? We have no idea of the entity called smart money, right? The small group of people behind the scenes that don't draw no attention to themselves, right? You don't see them online, you don't see them on social media. They're not trying to be influencers, all right? They're behind the scenes, just like puppeteers, right? Pulling the strings of the market and laughing. Look at them fools. They think it's buying and selling pressure. But yeah, that's how they're looking at us, right? We have no idea of this entity called smart money, all right? We have no idea that they even exist, all right? But they are the liquidity provider, right? You and me and everybody else in here, all right? We're in the big group here. We're in the big circle right here where we think that it's us that's moving the price action, okay? We're speculative, uninformed money. We're uninformed. We are willing or unwilling liquidity, okay? We are the liquidity to smart money, all right? They use us as we are the liquidity for them, all right? We are the liquidity, not us specifically, us small fishes, all right? But the big hedge funds, all right? The big 401k people that do all of that stuff, on all of those folks that people trust to control their money for them. They are the targets in the market, right? It's not us little guys, okay? Right, so to get to the side of smart money, right, there has to be a shift in your thinking, all right? You have to have an understanding that the markets are only efficient for the smart money, all right, and the central banks, the people behind the money, right? They drive price, they control it. It's their asset, it's their commodity, okay, all right. If this thing wasn't controlled, right, I wouldn't be able to understand what I understand now and know specifically what IPTA is seeking, right? Where it's going. My model wouldn't be as consistent as it is, right? If this whole thing was random, okay? The markets are controlled to the smallest degree. Like I said, it's AI, a computer program that delivers the price, okay? This is wonderful news for us, all right? For me and you, this is wonderful news, all right? Because right, this means that it can be identified and it can be tracked, okay? Because it's following code. Like I said, if this then that, that's what these candlesticks are following, okay? When you're able to do this, all right, track it, identify IPTA, all right, then you're able to leave this realm of this speculative, uninformed money, the people that think that they're the ones moving price action, right? Then you're able to join the smart money, the small group of people behind the scenes, right, that are really controlling these candlesticks, okay? I'm seeing if it gives me bread and butter here, okay, bread and butter, because I will have an account that just does 0.5. It doesn't matter the contract size, everything's coming out at 0.5, okay? Obviously, it's going to be a negative risk to reward ratio, but the fact that it's going to be more profitable than not, right, will outweigh the losses, right? The wins will outweigh the losses. So this right here, this continuation setup is the same thing I went over, right? Based on external liquidity here, dealing range buy side, right? Previous week's high, okay, is also a range, right? Is a range. Previous week's range, right, is a range, and this is an external liquidity, the high. We took liquidity below it. It's the same thing I drew. Same thing I drew here, right? Using this external liquidity, previous week's high, we come down, trade back below it, we go back above it, we come back down, we take liquidity below it here, okay, comes back up, market structure shift, back above it. This was the market structure shift, by the way, where my entry is at. This was the market structure shift. Also taking AM session open range buy side, right, confirming a buy program for this session. All right, so we have a day saying buy, the session saying buy, right? Everything is in alignment, right, for continuations for upside. Now, whether it's gonna go higher or not, it has nothing else here, no price here for price. Oh shit, I'm still holding this thing in it. For me right now, there's no other price level, all right, that could stop price from where it's going, which for me it's 20-day high, which is also previous day's high. So that right now is my draw on liquidity, okay? IPTA moves for two reasons. We'll talk about that in a second. To seek liquidity above and below price, and to fill any inefficiencies above and below price. Right now, I want to see price respect this inefficiency. This will be the last line in the sand for me. Trying to see if there's a gap there, but there's no gap. Not that I'll be reducing the risk on this trade because I'm only in it on one contract anyway, okay? So there's nothing really for me to do. This would be the last closure below this inefficiency, and then price comes back into it and then close below it. That would be, I will know by then I'm offside, all right? Closure below this inefficiency would be a warning sign. But once price returns back into it and then closes below it again, that would be, hey, you're done for in this trade. But the outcome is out of my hands, right? The outcome is out of my hands. But this is the kind of price action we're going to see with this sort of open range gap, right? You're going to see potential setups, right, that any other day would have did what they're supposed to do, they will fail, right? They will fail because this is the kind of price action we get with that open range gap that we got from this morning, all right? So I understand what's going on. I'm aware, right? Nothing's taking me by surprise, all right? I understand the risk when I step into this game, and I'm fine with it, right? But anyway, let's get back into here. Okay, so the goal here is to join the small group of people behind the scenes who understand the reason behind these candlesticks, all right, and why they move, why they do the things that they do, right? So there has to be a paradigm shift in your thinking as to why these markets operate the way that they do, right? It's not the driving force of buying and selling pressure from speculative, uninformed money, okay? But it's AI that delivers these price. That AI is called IPTA, all right? And we'll get more into IPTA in a second now when I can get this together. So the market efficiency paradigm is a game changer. Once you understand this, all right, everything just makes sense. It's like once you take that red pill and you see the matrix for what it really is, you can't unsee it. You can't unsee it, okay? Oh yeah, I know what this means. Okay, so IPTA, right? IPTA, interbank price delivery algorithm, IPTA. This is the AI that drives price, that delivers price action, all right? It has a purpose, right? This is the algorithm's purpose, right? The algorithm that controls price from the central bank level, okay? Not the mom and pop, not the banks that we know of, right? Not the well-known banks that we deal with on a day-to-day basis, not them. From the central bank level, right? IPTA, that's her name. It can be a he too if you want, right? It can be a shim, whatever you want it to be, right? It doesn't matter. IPTA switches for me on different days. Different days is a girl, different days is a boy, different days is just a it, you know. It is what it is. I put a persona to the algorithm. Depend on how I'm feeling, depend on how it's acting, okay? But yeah, IPTA only moves for two reasons, all right? It moves to seek liquidity above and below price, okay? And to reprice to any inefficiency above and below price. So liquidity is simple, it's easy, is anything, a short-term high, right here, this is liquidity. Any highs and lows, all right? This little high here has liquidity above it, all right? We're told to put our stops above and below short-term lows. Right now, my stop is below a low, right? Duh. My stop is below a low, right? So that's what we're told to put our stops, right? Above highs and below lows, okay? So that's liquidity. If they're seeking that liquidity, all right? Inefficiency would be this right here. This fair value gap is an inefficiency in price, okay? So it seeks to refill inefficiencies, all right? Inefficiencies in price, they're like gaps in price where there's no price action or there's one-sided price action, okay? That's what it's been told to look for. It's been told to look for inefficiencies and liquidities, okay? Because that's where we're told to put our stops, all right? That's what it's seeking, that's what it's searching for. And liquidities, right, comes in the forms, for me, all right, the major liquidities that I pay attention to, that I really gravitate towards, are like session liquidities, which is session highs and lows, all right? Daily liquidities, previous days highs and lows, previous week's highs and lows, previous month's highs and lows, 20-day look back highs and lows, all right, and 60-day, 40-day look back highs and lows. Okay, that's how IPTA looks back, all right? She looks back 20 days, 40 days, and 60 days. She looks for price actions in those ranges, and she seeks the liquidity and inefficiency between those ranges, okay? That's why I have my 20-day high, okay? For a short-term trader, that's pretty much all I need to focus on, the 20-day look back period, okay? But yeah, if it's not doing these two things, right, then it's consolidating, right? Which I think we have a diagram on here. Oh, I could have used the diagram, right? It's like the devil roaming on earth, right? Seeking whom he may devour, right? If they're seeking liquidity and she's looking to fill inefficiencies, all right, in price and then continue in a direction where it's going, okay? If it's not doing one of these two things, right, then it's consolidating, it's stuck within a range, all right, really and truly, okay? This is an example of a consolidation, right? This is an example of buy side liquidity, and if they're seeking those liquidity, taking the sell side, coming to take buy side, all right, filling inefficiencies, filling imbalances, and just that's what she's seeking, right? She's seeking inefficiencies and she's seeking liquidity. So main things to understand here, okay? Main things to understand here is that these candlesticks are controlled to the minute, smallest degree, all right? There's a purpose and a reason behind why it's doing the things that it's doing, okay? And those are the two reasons we just talked about: to seek liquidity above and below price, and to reprice to any inefficiency above and below price. And if it's not doing any of that, it's consolidating, okay? So this is how the market operates, right? Via AI, delivers price, okay? It's controlled, and it's good that it's controlled. That's wonderful news for you and I, right? That means it can be tracked and it can be identified because it's following code, okay? It's following code. If this, then that. That's what they told it to do, all right? Simple as that. I said this is my last line in the sand, okay? If we get a body closure, all right, below this inefficiency, that's warning number one, right? But however, if price comes back into it and then closes below it, that's, hey, you're done for in this trade. Just let it go. You are done for. You are the weakest link, all right? You are the liquidity today. You are the liquidity, and we're seeking your ass, my trucker. And I won't be mad at it. I won't be mad at it because I already understand what's happening based on that open range gap, right? This will just be another set of data collected to be like, hey, once we see this kind of open range gap, wash our hands of the day. It's not even worth it. It's not worth it. Come back either PM session, all right, or come back either the next day, really and truly come back the next. Because even from last week Thursday, the PM session wasn't even that clean, really and truly. There was only like one good setup, and it was like 1150 macro, I believe, for the day, and that was it. Okay, so we've got that warning, all right. We've got a closure below that inefficiency, all right. Next candle closes below it, we're done, all right? But if it comes back into it and then closes below it, 100% for sure, this is done for, all right? But this is the risk I take. I knew what was going on. I knew what it was when I signed up. It couldn't even give us bread and butter setup. That's just how bad it was, right? For the fact that it couldn't even give us bread and butter. Like, come on, man. Bread and butter is like 80% of the time you're getting bread and butter, right? So when you're not able to get bread and butter, that's just a signal in itself that, you know, that this price ain't gonna do what you want it to do, okay? When it struggles to even hit negative 0.5, you already know what it is. We didn't come back in it yet, okay? But we're still gonna get a candle body closure below it. Nothing for me to do right now. I have to wait till the fat lady sings because I've only got one contract. So we understand how the market operates, okay? Do we understand how the market operates, right? There's a driving force behind the market, all right? And it's not uninformed speculative money. It's not our buying and selling pressure that makes these candlesticks move up and down, okay? It's smart money. The market is efficient for smart money, all right? They're the driving shaft behind price. They control it. It's their commodity, all right? If you owned anything, right, it's yours. You set the price. If you wanted to sell it, you're going to set the price of it, all right, for yourself. You're going to control it. You're going to control the price of it. And that's exactly what's going on here, okay? Same thing, same concept. IPTA, all right, interbank, the AI that delivers price from the central bank level, all right, from the central bank level, understand that, all right? Moves for two reasons: to seek liquidity above and below price, right? And to read price into any inefficiencies above and below price. And if it's not doing any of these two things, okay, it's consolidating, meaning it's stuck within a range. Yeah, now this is the part where I need to adjust. Yeah, okay, before we get there. Because this trade is done for. I already like chalked it up as a loss, right? I already know what's coming, right? So I'm preparing myself. All right, I'm ready for it. Let's get ready to get that snapshot. All right, it ain't always sunshines and rainbow here. All right, it ain't always sunshines and rainbow. All right, sometimes it rains, and when it rains, sometimes it pours. When it rains, it pours. Do your thing, man. Do your thing. I get you though. I understand. Sometimes I need to go through things, a few times to be like, okay, this is the message I'm supposed to get from this, and it is what it is. All right. Now the data that I'm getting back from this, right, is that based on the open range gap, right? Once I saw this, we should have just did that PowerPoint and dipped. Right, moving forward. I did say I was gonna do that last week, but it's okay. There's another data set point collected, right, for this. Okay, now we know, understand that, hey, come on now, look at that open range gap. We don't want no parts of this price action, right? Even setups that any other day would pan out, you're not gonna get that clean price action that you want to see on days like this. Okay, so learn from this, all right? Learn from this, collect the data, and adjust accordingly, okay? Adjust accordingly based on the data that the market is giving back to you. Oh, look at this. I even wrote this down. From Thursday, I wrote this down. Small open range gap, no trading. Underlined, exclamation point. Okay, all right, well, now we got another data confirming that we don't trade on these days, okay? So sometimes we only learn through pain, all right? And that's human nature, right? Sometimes we only learn certain things through the pain. We go through the pain so much, we're like, oh, I don't want to go through this pain again. So you know what? I'm cool with that. I'll change behavior. Sometimes only pain leads to change in behavior, all right? Those who don't hear must feel. And I'm feeling it right now. I'm feeling it. But cool, that's getting added to the procedures and protocols, okay? All right, it's data collection at the end of the day, right? That's all I'm doing here. I'm collecting data, all right? And I'm extracting the information that I need from the data that I'm collecting, all right? And I'm refining my procedures and protocols. I'm refining my processes. And that's all I can do, really and truly, all right? That is all I can do. So yeah, no more trades for me for the remainder of the day. No more trades for me. When I'm done here, I'm done here. I'll just kind of tape read for the remainder of the day and just watch the market from afar, all right? I won't be engaging in it because yeah, I learned my lesson. It may take a few times, all right? It may take a few times, but eventually I'm gonna learn my motherfucking lesson, all right? We need some new mistakes. Anyway, so once you understand how the market operates, right? You understand how the market operates, right? You need to have one trading model, one pattern, all right? As technical traders, right, we only need one setup, one pattern to trade on. It's important to know that every trading model loses. Every trading model loses, all right? The only two things promised to us in this industry that we'll experience a loss and we'll experience a series of losing trades. Every trading model is going to lose. You have to accept it. The goal is to find your unique model, all right, and grow with it. Collect the data, refine it like I just talked about, okay? All right, every model is going to lose. Don't worry about the losses, all right? It's our job here is to manage the losses, right? Because we know it's coming. We know we're going to experience it. There's only guarantees here, okay? This loss I'm about to take, all right, It's guaranteed to me. I'm gonna take a loss. I know this. I understand it. I am aware of my risk before even entering a trade. Okay, I accepted how much I want to lose in a trade, and that's what I'm basing it off by. And my loss right now is 250. Okay. Anywho, it's first hour of trading is behind us. All right, we're still in this trade by the skin of our teeth, but pretty much won't be looking for any if we close back above this inefficiency, all right, it will restore some faith in this trade, all right. Based on the candlesticks, it will restore some faith in this trade for me, all right. I need to see I need to see a body closure above this inefficiency. Price comes back, all right, uses it as in what is supposed to be a reclaim. Would this be a reclaim? Nah, this is the point where the knowledge really comes in, right? It's a bullish fair value gap. We'll be back to using it as a bullish fair value gap. Right now it's acting as an inversion. Okay, I want to see price close above it. All right, right now it's supporting it. All right, supporting it low. I want to see a body closure above it. Price comes back into it. All right, and we reclaims it as what it was. Right, that's what would be a reclaimed fair value gap. So that's the only thing that will obviously let me know that potentially, this trade will be or could be going into my direction. All right, I'm just following the candlesticks right now. That's all I can do right now. Nothing for me to do. I want to see a body closure above this inefficiency. Price comes back into it and closes back above it. Okay, and we continue higher. All right, that's what I want to see. Did we close above that? Me can't see. No, we didn't. We didn't close above it. We didn't close above it. But anyway, only one model, right? So knowing, understanding the two reasons why ICTA moves, right? You can have a model based on liquidity, which was what we do here at Traded Capital, right? Our model is based on liquidity, on the external liquidity, because it's obvious in the chart. You can't miss the session highs and lows. It's predefined time and the highest high and the lowest low. You cannot miss that, right? It's predefined and it's just clear and obvious in the chart, right? So you can have a model based on liquidity or inefficiencies, okay? Depending on whichever one jumps right at you in the chart, okay? For me, personally, it's liquidity. I think for majority of people, it's easy for us to see the liquidity because it's just clear and obvious in price, right? You can't miss it. They can't hide it from you. Unlike the inefficiencies, right? Sometimes it's hard to know which inefficiency. It's not hard. Obviously, there's ways to know which inefficiencies are more prominent than others, okay? But it's just harder to, for me personally anyway, I'm speaking from personal experiences, it's harder for me to grasp the inefficiencies more than the liquidities, okay? So you want to have a pattern or model that's based on either liquidities or inefficiencies or both, all right? Well, for me, for my entries, for one of my patterns, right, which is my continuation patterns, right, is inefficiencies and or liquidities, right? Like the diagram I just did for you, right? For the continuation setup, price can either come into an inefficiency, a fair value gap, all right, below like it did here, below the key level. Let's say this is the key level, is dealing range buy side. We'll put buy side because it can be any buy side. That was pathetic. Hold on. Yeah. We'll just say this is buy side, right? Price comes into an inefficiency below it, all right? Market structure safe back above. That will be a continuation setup for me. I'll be interested, right? Either inefficiency and or it can come back below, take liquidity below it, right here. Market structure shift back above, and that will be my continuation pattern right there, right? So for me, for my continuation setups, right, is I'm using both liquidity and or inefficiencies, okay? So you can have a model based on just one. Retracement setups for me are based on just liquidities, okay? And for continuation setups, I use both liquidity and inefficiency, okay? So I'm using both things, all right, in one, okay? So you want a pattern that uses the two things that IPTA is seeking, all right? Liquidity and inefficiencies. Okay, so I like that this candle, right, this 1033 candle closed above it, all right? Now, I don't want to see a body closure back below this inefficiency, all right? It can wick below it. I don't have no problem with the wicks, all right? Wicks do the damages, but the bodies tell the story of price action, okay? Remember that. Wicks do the damages, the bodies tell the story, okay? So I don't mind it wicking below it, but as long as I'm not seeing a body closure, all right, below mean threshold of this inefficiency, this busy, okay, that's what it's called, busy, then for now I'm seeing the candlesticks, the price action, the characteristics, right, that I'm on side in my trade, okay, that potentially we could be heading higher now, okay? So I don't want to see any body candle closure, right, below the mean threshold of this inefficiency. See, these are the subtle things that IPTA does, right? It's controlled, man. If it wasn't controlled, I wouldn't be able to understand these things. I wouldn't be able to kind of have a gauge of, hey, because these things are happening, all right, it's telling me that IPTA wants to continue higher, all right? Control to the minute, the smallest degree, all right? Understand that as the most important thing for you to get here, all right? Now I want to see price leave this range, right? And head to these relative equal highs here that is created above here, okay? Candle body closure below this, all right? Then potentially I'm offside again, okay? But I don't want to see no body closures here. I want to see price leave this range, all right? Take out these relative equal highs that I created here, okay? Because somebody sold here, all right? Somebody somewhere, somehow their model, their pattern told them to sell here, okay? And their stop is right above this swing high, okay? This is engineering of a liquidity, all right? We came up here and just randomly just dropped back down, okay? Creating this short-term high in price liquidity, okay? That somebody shorted here, they have their stop here, all right? Potentially IPTA could be seeking these stops here for whoever sold, all right? Somebody made money here. Somebody's making money down in this drop there, okay? So this is the continuation patterns, all right? We have two versions, right? It's either inefficiency or it takes back below. It trades into an inefficiency back below. It takes liquidity. This continuation setup that I'm in, right, was the latter. It took liquidity below an external liquidity, right, which is previous week's high. We came below it, traded back above, came back below, took sell side below a short-term low, all right? Then we got a market structure shift back above it here, okay, which was the setup that we're currently in right now, okay? And until the fat lady sings, so far so good for me right now, okay? It wasn't looking good at this point here, but from this price action here, okay, it's telling me that potentially it wants to continue higher. I'm trying to see something here. I respected 0.75 of this wick right here. Cool. So one model, right? One trading pattern based on liquidity or inefficiencies, or you can have a combination of both like I do for one of my models, all right? One of my patterns, all right? I have two patterns really and truly, right? Which is step two, right? My two trades, I can take a retracement setup or continuation setup, right? I have a retracement pattern and I have a continuation pattern, right? The continuation pattern just happened to be two variations of that pattern, okay? All right, and the last thing to build confidence in your trading edge, all right, is to have a plan and process. It's to have a plan and process. It's to have a plan and process, okay? Close your back below here, all right? Now you're just toying with me. Close your back below here, all right? Reduces the probability of my setup again, okay? But if you're paying attention to the candlesticks right now, come up to external liquidity, right? We're taking liquidity below it, all right? I want to see a market structure shift back above. If we take the short-term high above, right, or add more confluence to my setup, okay? We've got a closure back below that inefficiency here, all right? This is the kind of price action you're going to get with that open range gap here, okay? Probability of my trades is just reducing as we go now. It's back to where we was before, right? It's back to where we was before. Until we take this high up here, the short-term high, okay, until we trade to and through the short-term high, I'm done for. I'm done for. All right, we're on plan and process. We're on plan and process, okay? All right, and when it comes to a plan, having a trading plan, okay, you need a plan for these three things, okay? You need a plan for these three things. Oh yeah. Ah, I can use these still, innit? Okay. Yeah, I don't need all of that, but I can still use these as a. All right, that will be for next week. I'll do it better for next week for the plan part. Well, for the model part, so we can have a visual understanding of what I'm talking about. Okay, so, all right. That's down. That's noted. That is noted. Okay, all right. So when it comes to plan, all right, because it's a plan and a process. They're two different things, right? You need a plan and you need a process. Okay, when it comes to a trading plan, right, you need a plan. You need a plan for these three things. You need a plan for these three things. Bear with me. We're back, like I said, we take that minor structure up above the external liquidity right there, right here, like we just did, okay? This in itself is a continuation setup, okay? External liquidity, we drop below it into an inefficiency and we take sell side, right? Short-term lows below it. Swing, displacement, market structure shift back above that external liquidity. There's two external liquidities here that you can frame this setup on. Dealing range high and open range buy side, okay? All right, so now, all right, this adds a bit more confluence, all right, and confidence behind my trade that I'm on side, and that potentially IPTA is targeting these two relatively core highs that engineered, and ultimately to previous day's high and 20-day high currently above price, okay? So this in itself is a setup, okay? We do have time, okay? We have a 30. We do have time. But for now, I'm really just more focused on macro setups, but hey, I'm gonna have an account for the 30s as well, right? Like this account I'm trading right now can take 30 setups, okay? So I'm already in a trade, so there's no need for me to re-engage in the market again, okay? As you can see here, we came back into an inefficiency below dealing range high. Below dealing range high, bear with me guys. Okay, this in itself, right, if we have time here, it's 10:30, first hour of trading is behind us. Okay, where is price? Price is dealing range buy side, and we have open range buy side. We trade above it. Okay, we come back below to dealing range buy side. We drop into an inefficiency. Look at this diagram right here that I just drew. This diagram right here is exactly what I'm walking you through right now. Okay, so this is the high, all right? This is the level right here. We drop down into an inefficiency below external liquidity dealing range buy side, okay? Right here, swing, displacement, market structure shift back above that external liquidity right here, all right? Beautiful, man, beautiful. That's one of my patterns. That is one of my patterns. It's a continuation pattern. This characteristic is letting you know that price wants to continue in the direction of where it is taken, right? We traded above buy side, okay? So it wants to continue higher, right? Beautiful, beautiful, beautiful. Very nice, very nice. We just talked about it, now we're seeing it live in the price action. The diagram, this diagram right here, right? We also do take liquidity. So is inefficiency and or liquidity, right? So it can be both, it can be one individually, or it can be both, right? So we do take buy sell side as well below that external liquidity. Either one external liquidity that you're using, you're fine, right? So we take liquidity and we drop into an inefficiency here, okay? And then market structure shift back above those external liquidities right there. All right, this is a continuation pattern, okay? Using both liquidity and inefficiencies. And or, right? So it can be one or the other, or it can be both, okay? When it's both, it's much more powerful, okay, than just the one by itself. But it doesn't mean the one by itself still isn't a powerful pattern, okay? So now I want to see price respect this inefficiency here. I want to see price respect this inefficiency. We also have another one in here, okay, down in here. So if it disrespects it, I'll be looking to see how it respects the one below. But anyway, this is the kind of price action you get with the kind of open range gap that we had today, okay? So it's not really exciting, it's not enticing, it's not like, ugh, you know, it's not like, you get in and you get out type of price action here, okay? This is you get in and you have to sit through the drawdown, you have to sit through the ups and downs, you have to sit through a lot more things that you want to sit through, okay? And if it messes with the psyche, right? For somebody that's not very well experienced in the market, this is not a day that you want to be, you know, taking a trade or being in the market, all right? All right. Back to trading plan. Okay, you need a plan for these three things. You need a plan for your account. You need a plan for risk management. Okay, holy grail trading, and you also need a trade management plan. Okay, so these are the three things you need a plan for. All right, and we're gonna get into them individually. Okay, respecting this inefficiency here. Okay, so far I'm seeing the characteristic to let me know that I'm potentially on side. Okay, but it's just price action is just really fuggly. Okay, it's really fuggly. But it's still giving us somewhat of clean setups, right? We're watching this one too. Watching this continuation buy here. Right, it's -2 is right below our drawn liquidity currently. But this is the kind of price actions you get with that open range gap that we have. Okay, so it's just a mental note for me. I'm gonna keep reminding myself. 1050 macro kicking off. Hopefully we inject some volatility here in this 1050 macro, and it just sends price to where it needs to go. But I'm gonna keep saying it because I'm reminding myself. Okay, it's really for me. I'm reminding myself that this is the kind of price action that I'm gonna get with the open range gap that we got today. Okay, so don't beat yourself up too much. All right, don't expect the unexpected, really and truly, in this kind of price action. Okay, expect the unexpected. Let's see if 1050 macro sends price higher. Let's see what it does. All right, for your trading plan, in terms of your account plan, all right, for your account plan, right, these are the questions that you need to answer, all right, to build a trading account plan. It's like a business plan, right? Every account needs its own plan. It needs its own settings. It needs its own hours. It needs its own different plan. Okay, so if you have multiple accounts that you're trading, you need a plan for each and every one of the accounts. Okay, so how are you going to approach the market, right? How are you going to approach the market, all right? What is the purpose? What is the goal of the account, right? Is this to meet your ends? Is it for earned income? Is it for investments, right? Is it for just entertainment and just lifestyle, right? You need an account, you need a plan, you need a goal for the account that you're trading. Okay, what's going to be your monthly and weekly targets, right? You need to set limits for yourself, right? Once you hit these targets, all right, you're done trading on that account, right? You move on. Either you have that one account and you hit the targets, you're done for the week, you're done, right? You're not looking at these markets. Okay, all right, what asset class and market within that asset class will you be trading? Okay, for us, we trade the futures market. All right, well, the asset class is futures. All right, and inside of the futures we trade the NASDAQ. All right, so NQ for us, MNQ right now, but the goal is to upgrade to NQ. Okay, it's the same price action, just the leverage is different, right? MNQ is for the babies, right? Zero capital, no capital, learning, trading. But NNQ is like when you graduate. Okay, NQ is when you graduate, is for the big boss, when you know exactly what you're doing. All right, when you got the big money, big bucks behind you. Okay, don't mind starting small, all right? Humble beginnings. But what asset class are you going to be trading, and what market within that asset class will you be trading, okay? For me, I always say master one. Master one is important to master one. Master one pattern, master one asset class, master one market, okay? Then, if you want to add more to your repertoire, that's plausible and that's doable, but initially you have to master one first. Okay, and what days and times will you be trading? What will be your business hours? Right now your current position or job might limit you from trading as much as you want to. Okay, so what does your time currently offer you to be in the market to trade? What will your business hours be? Okay, and you kind of just stick to that, right, until that changes, right, until that changes for you. It's a little example here, all right? A little example on the side here of something that you can. Is this a picture? Oh, I need to change this to. Oh, there is a picture. Yeah. If it was a text, I could make it bigger, but yeah, okay. All this needs to be it needs to be changed. It needs to be upgraded. It needs to be updated. Okay. I just haven't had the time. Well, I have the time. I just really been pretty lazy to do it. All right, but I need to get on that. Right, so we will focus on the approach and plan of action that can harvest monthly ends and investments. Okay, monthly goal for you could be currently what your break even is for you to maintain your expenses. All right, your break even. This is one plan, right? I'm following. Okay, for one of my accounts, this is exactly what I'm following. Okay, this is exactly what I'm doing. For me, it's gonna be an ends or my break even, my ends meet account. Okay, and it's gonna be once I hit my break even for the month, I'm done. Right, no more trading. Okay, Intraday index futures day trading. Okay, I'm a day trader. I will once I set up that training. When we do the training, we'll talk about, you know, why day trading, right? Why is more risk adverse than other styles of trading. Okay, I'll get more into depth about that. Okay, there's a lot for me to, right, a lot of information to share, and I have it. I just need to put it together. Okay, 6 years in the making, so I've got a lot of information in this noggin. All right, and I've put in some majority of it down. All right, now just about putting it in a certain order that makes sense for other people. Okay, not just me, because stuff is weird in my head. Okay. And that's why I'm always open to feedback and criticism. Okay, anybody that watches these videos, all right, if anybody's watching these videos or listening to me, yabba yabba yabba, all right, anything that I can do, right, to improve and get better in terms of my communication. If you're not understanding something that I'm saying, please let me know so I can work on how I'm communicating it, so I can be a better teacher, all right, or a better educator, or a better influencer, or a better communicator. I'm always looking for ways to be, because one flaw that I have is my explanation. I hate explaining things. I don't pretty much know how to explain things to the point where it makes sense in my head for it to make sense for other people. Okay, so I'm always looking for ways to improve in my communication, and if any feedback you can give me, all right, I'm open, I'm willing. I won't take it's criticism, right? I'll take it as for what it is and look for ways to improve. Okay, so if you're watching this, all right, if you're actually paying attention and if you're actually listening to me, please, I want your feedback. All right, let me know how I can improve, what I can do differently. All right, obviously everybody has different learning styles. Let me know what your learning style is. All right, how you learn. Okay, so I can kind of tailor my teachings and my educations to your preferred learning style, so it makes it easier for you to understand. Okay, yeah, I don't mind doing different things and trying different things out. All right, as long as it's for the betterment of myself and other people. All right, I'm always open and always willing to adapt. All right, and grow. All right, 1% better every day. All right, and pretty much that was my little PSA for you guys. For anybody that's listening, anybody that can hear me, that's paying attention to my voice right now. All right, if you're listening, all right, not just watching to watch, right? If you're listening, please, I welcome your feedback, I welcome your criticism, and whatever you have to say to me, I'll take it with I take on my chin, and it won't be like painful or hurtful to me. Okay, because I'm asking for it. But anyway, account size, this is for my funded account, all right, the 50K account that I have one 50K account and two 100K accounts, all right. So this will be for my 50K account. This is for my 50K account. This is what I'm aiming for. Okay, this is what I'm aiming for. That's why when I say 3% a week, this is what I'm aiming for. What's 3% of 50K? Is that even correct in what I'm looking for? 3% a week times 4, 3 times 4, that's 12% in a month I'm looking for. So 12% times, is that correct? Is that 6K? 50 times 3% is 1500 times 4. Yeah, 6K. Well, this is way above my break even, but it is the start. Is the start. Is my start, right? Is my start. Obviously, I'm not gonna hit that each and every week. I understand that, I get that, right? But that's my goal. I'm striving for that. Once I do hit it, I'm done, right? I'm not always gonna hit it every week. I haven't hit it since I've set it. For really and truly, I haven't hit that target since I've set it. But that's my goal. That's my 1500. 1500 a week. That's very that's very doable. 1500. Okay, so the 3% on 100K though is 3. Obviously it's double that. Duh. 1500 a week. All right. Anyway, as I was saying, I haven't hit that. That's my goal. That's my target. But I haven't hit that since I've set it. Okay, but I'm striving for something, right? If you aim for nothing, you hit nothing. But if you strive for something and you don't hit, at least you're working towards something. Okay. I see price IPTA is taking those relative equal highs that you engineered, all right? Whoever put their stops here from the sell here, all right, you're about to get smashed the fuck out, all right? What is that relative equal highs here? 64725, 647, okay? It's just a little bit below it, didn't take it yet. It's giving them false hope. It's giving them false hope, but we all know what's about to happen here. We all know what's about to happen. Yep, smashing them out. And that's what she does, right? She engineers liquidity, right? And she seeks that liquidity. She engineers inefficiencies and she comes back and she refills and reprices into those inefficiencies. All right? And that's how she's moving. That's how she's doing these things, okay? If that wasn't true, right, I wouldn't have been right in terms of me seeing price action respect this inefficiency, right? Understanding that, hey, is failing to close below it, right? The wicks do the damages, bodies tell the story. So for me right now, the characteristic is that I'm good, I'm on side, and the drawn liquidity is still intact, right? We still have a target up here that is drawing to however slowly it gets there, right? This is my ultimate draw on price, okay? So let's see what it do. Let's see what it do. But this kind of price action is very, very, very valid with the opening range gap that we initially talked about from this morning, okay? So if you don't have at least 2 years of experience in the market, all right, this is a day that you typically just want to, if you see a small open range gap like this, just let the day go. It's okay. There's going to be plenty of other opportunities, all right? Plenty of days coming up that you can trade that will be much better than today, all right? Because right now I've been sat in this trade for how long? Let's do the math. We got into this trade right here at what was this candle? Right here at 10:07, right? We're coming on to an hour, right? We're coming on to an hour. If I go to my dashboard and show you like the amount of how the length of my trades, oh my god. Hey, I'm not advertising these folks, by the way, but these are the people I'm using currently, all right? So far, no problems with them so far, okay? So I used to trade with Top Step, but then they started doing too much, so I had to jump over here. So far, no issues whatsoever with Lucid, okay? Anyway, well, let's go to this, the losing account, the account we're currently on. If you look at the duration of my trades, okay, all right, we have a 53.51 as the current highest time, or we have right here 86 minutes 53 as the current highest time, okay? But if you're looking at the duration, right, I'm not in the trades long. I'm not in the trades really pretty much that long, right? Regardless of whether I'm winning or losing, right? My longest trade is about an hour and 26 minutes. That's right? 60 at 2, yeah. An hour and 26. That's quick math. You saw that? Ooh, pat me up. Pat me up. 66, an hour and 26 minutes. That's quick math right there. I'm not usually good at quick math, so I did that good. Anyway, I'm not usually in this trade 40 minutes, 42 minutes here, but usually, all right, it's like average, I would say about 20 minutes, right, in a trade. Averaging 20 minutes in a trade there, okay? I'm using that because it has more samples, more trading days, okay? Right? I'm not usually in a trade for that long, right? And this trade has been just dragging its feet, you know? It's just like one of them trades that you want to rip your hairs out, you know? Like, oh, just one of them trades you don't want to be in. And that's indicative of that open range gap, okay? I'm just trying to drive that to myself, right, in my head to remind myself that, hey, when you see a small to non-existent open range gap, just close the chart, say goodbye to the stream, let it go. I'm sorry. Today we're done. That's it for us here today. And just come back tomorrow, refresh, rejuvenize, and, you know, get on with your day. Anyway, trading plan, all right? So you need a plan for your risk management, okay? You need a plan for your risk management, all right? And in your procedures, all right, in terms of your risk management, should ensure that no single trade or series of trades, the only two things promised to us in this industry, can significantly impact your account, all right? Capital preservation, it's key, is our number one job here. Preserve capital, live to trade another day, all right? You don't want to over leverage, all right, and just blow your account in one day for just no reason, right? It's okay to take losses. They're the only thing promised to us, right? Our job here is to manage the losses, all right, and not let one single loss, a series of losses, all right, deplete our account. Okay, so you need a blueprint. All right, I have an example of a blueprint for risk management. Okay, risk management is very personal. Okay, like I said, trading is very much a solo sport. It's okay to do with others, but at the end of the day, it's just you and these charts, all right? And everybody's risk tolerance is different, all right? My risk tolerance is going to be different to you. You have to demo different risk management styles or different risk management, okay, to then understand how you feel in terms of when you take a 2% loss or compared to a 3% loss. Is that something you can handle? If you can handle it, right, you just increase it onto the point where when you get to the point where it's like, ooh, that loss really hurt me, I feel something inside and I cannot take these losses, right? Then you just come back down to where you feel comfortable, right, until you can slowly, incrementally increase your risk, right? That's why I'm starting at my lowest leverage, right, which is 0.25. And obviously, as I build more confidence, as I gain more experience, okay, I'm going to incrementally increase that risk, okay, risk appetite. Also, as my capital grows, right, I'm going to incrementally increase that risk. Alright, so yeah, you need to risk no more than 2% of your equity as somebody that's starting out fresh, alright, with no experience, alright, no more than 2%. Even 2% is too high, or I'll say 1% and below if you have less than 2 years of experience under your belt in these markets, alright. If you have less than 2 years, alright, stay at 1% and below, okay, 1% and below, alright. And as you build and you gain more experience and you collect more data in your model and what you're looking for in your processes, then you incrementally increase, okay. But risk no more than 2% at any time. Have a model that offers at least a 1 to 3 RR, right? This is not an end or be all, okay? You can still be profitable with a 1 to 1, you can be profitable with a 1 to 2, you can be profitable with a 1 to 3, but at least with the 1 to 3, okay? You only have to be right 25% of the time to be profitable, okay? That's why I say at least a 1 to 3, but it's not an end or be all, right? As a newbie, as a beginner in these markets though, all right, at least look for a 1 to 3 because it allows you to be wrong 75% of the time and still you'll come out on top, okay? The probabilities are in your favor. Okay, after a loss, all right, it's a personal preference sometimes, right, after a loss, but we understand that losses are the only thing promised to us, and every trader will experience a loss and a series of losses, so we're always preparing for that series of losses, okay? So after a loss, right, you have two options, right? You can either keep the same leverage or you can reduce your leverage, right? After a loss, after 2 losses, right, maybe you want to keep your leverage for the same 2 losses, and then after 2 losses you want to reduce your leverage, but you want to have something in place, a procedure and protocol in place, that when you take a certain amount of losses, right, okay, now it's time to reduce the loss, so we're not constantly taking the same amount of leverage in the loss, right? Just it gets you to deplete your account quicker, right? But once you reduce the risk, right, you're going in at a lower risk, and if you take another loss, then it's a smaller risk than you initially would have took already, okay? Also, if you find yourself on a winning streak, all right, you've been winning, right? For me, it's 5 consecutive wins, and then I'm reducing my risk back to my lowest leverage, okay? Because the numbers are that series of losses is coming, it's always coming, all right? It's a probability is going to happen, right? You're going to take a loss, you're going to take a series of losses, always coming. So our job here is to prepare for that series of loss, right? Whether you're on a high or a low, right? You're always preparing for the next loss, right? So after a consecutive amount of wins, right, you want to reduce your risk, get back to at least your lowest leverage, or just go down, all right, go down to your lowest leverage and then work your way back up. It's like a local game, right, that you want to play with yourself. I take a loss, I reduce the risk. I take a win, I'm going up, I'm going up to my highest point. I stay at my highest point until I take another loss, then I'm back down, then I'm back down, then I restart the whole thing again, okay, and you're working your way back up, all right? It's like how many times can you get to your highest leverage and stay there, right? And then reverse that thing once you hit at least 5 consecutive winning trades. Start from the bottom again, right? Because you know that loss is coming, you know that series of loss is on its way, so you're preparing mentally for it, okay? So yeah, so that's kind of like a little game you can play with yourself when it comes to risk management. Okay, keep it interesting, keep it entertaining a little bit. Okay. Um, Also, you need maximum losses per day. All right. How many losses do you need to take per day? That comes with having a max risk per day, per week, per month. So if your max risk per day is what, $1,000, right? And you have, let's say, 100K account, and you're risking 1%. Okay, 1% is $1,000. It's 1% of 100K, $1,000. I think it's $1,000. Then you can only take one loss a day, right? You can only take one loss a day, so be aware of that. But if your maximum loss per day is what, 1% of your account, right, which is to a 100K account, again, is $1,000, right? Then maybe if you want to take 2 or 3 trades, but you might want to reduce your risk, right, to 0.5, which allows you to take 2 trades. But if you reduce it to 0.25, right, it allows you to take about 4 trades, right? It allows you to take 4 trades, four trades for the day, 4 opportunities for the day, all right? So your maximum loss per day, right, depends on your maximum risk per day, okay, and how much risk you're taking per trade. Okay, you also need weekly and monthly targets. All right, this is imperative for risk management as well. Okay, once you hit those, you're done, right? You know, the more you're in the market, the more opportunities you're giving it. 11, I caught it before it's too late. The more opportunities you're giving the market to give back to the market. All right. Also, pro trends and counter trend trades. How are you going to manage them in terms of risk? Right? Are you going to risk more when you're going with the trend, and risk less when you're going against the trend? All right, that's a personal preference. For me right now, my risk is all the same, right? So it doesn't really matter whether it's a pro trend or counter trend trade for me right now. Okay, maybe down the line I'll have a procedure in place that obviously has a different risk management when it's completely automated and out of my hands. Okay, I'll have something in place for those 2 factors, but for now I don't want to complicate it too much because I'm the one doing it physically. Okay. All right, and then you need a plan for your trade management. How are you going to manage the trade, right? How are you going to enter, manage the trade, and close, exit the trade? Okay, that's trade management. Okay, so for pro trend trades and counter trend trade, like we just talked about in risk management, are you going to manage them the same, or are you going to manage them differently, right? Are you going to take maybe more out from your first partial on the counter trend trade and keep and have less left, or are you going to take less out on the pro trend trade because you know you're going with the trend and you're anticipating price to go higher or lower, all right, despite where it's going and what you're expecting? Are you going to take less out and then save more for capitalize on a bigger move, right? What are you going to do? Are you going to manage them differently, right? Are you going to partial, or are you going to be a full pull trader? All right, partial means you get in with a certain amount of contract, and as price hits your target points, you're taking something off. You're taking something off until obviously it gets to your terminus. All right. Full pull means it's either gonna hit you for your stop loss, or it's gonna hit you for your target where you're anticipating price to go. Okay, and it's one or the other, right? It's either gonna stop you out or it's gonna hit you for your target, and that's pretty much what full pull means. All right. Doesn't matter how many contracts it is. It's gonna take you out or it's gonna hit your target. And then stop loss adjustment. Are you going to adjust your stop loss, right? Whether you're going to be a full pull or partial trader, are you going to adjust your stop loss? All right, you're going to move the stop loss as price offers you your targets. Are you going to adjust your stop loss? Are you going to adjust your stop loss as price goes against you and shows you the characteristics that you're offside? Are you going to take something off? Right? That's all questions that you need to have. All right, it's a plan that you need to have. All right, so when you come into the charts, right, you're not second guessing. You already have all of this in place and everything is set in stone. You know what you're doing. If this happens, then I'm doing this, right? We have that algorithmic thinking in everything that we do here in this chart. So it's not like you're not bringing emotions into it. It's just logic. It's just pure logic, right? Because that's what this market, this AI is working on. It's pure logic. It's got no emotions, right? It's working on if this, then that, right? So if I get TP1, right? If I get take profit one, Michael hates when we say TPs like toilet paper. if I get take profit one, right? Then I'm gonna take something off and I'm gonna adjust my stop, which is currently what I do, right? If I get target 2, right, I'm gonna take something off and then I'm gonna adjust my stop again, right? If this, then that. If this, then that. If this, then that. All right, that's how you need to be thinking. If this happens, I'm gonna do this, right? You need to have it set in place so you're not you're not thinking too much, right? Because once you start thinking too much, emotion starts to come. You're like, oh, but I want more. Oh, but yeah. Oh, but it can keep going. Oh, I think price is going here. No, no. Ifta's gonna do what she's gonna do, right? You have to have control of yourself, right? You have to control yourself. You have to be like, okay, so if this happens, all right, this is what I'm gonna do, and no emotions, pure logic, pure algorithmic thinking. Okay, you're on the same playing field as Ipta. We're working here. I'm with you, Ipta. I'm right there. I'm trying to get on your level. I'm not on your level yet, but I'm trying to get there. All right, because she ain't thinking. All right, she ain't thinking. She acting. She has a code. She has a if this then that. This is what I'm doing. All right, and that's what she's doing. Okay. We're gonna stay until this trade does something, right? And until I finish, because we're almost there. This we talk about every beginning of every trading session that we have here. I'm the Trader Capital, right? Every stream we talk about this, all right? We discuss this, okay? So I'm not gonna go into too much depth, okay? All right. So when it comes to a plan, we've already talked about a plan. You need a plan for the three things we talk about. You need a plan for your account, risk management, and trade management. Okay. And then you need a process. Successful trading is boring, right? You're doing the same thing over and over and over and over again. All right. This eliminates the thinking. It eliminates the emotions. It eliminates fear and greed because you already have a process. You've collected data on that process. You walk that process forward. You know that that process can deliver. Yes, that process is going to take a loss, right? It's going to take a series of losses, but those are the only two things promised to us, right? As long as you learn to manage the risk, right? The holy grail of trade and risk management, which we'll get more in depth about tomorrow, right? Risk management Wednesdays, okay? That's our goal here. Capital preservation is our goal, is our number one job. We're money managers, right? We're money managers, right? Our job here is to manage money. And in order to manage money, you have to manage the risk, all right? And everything comes with risk, right? Everything comes with risk. Anyway, when it comes to the trading process, I'm the Trader Capital. We have a 3-step trading process. It's simple, dimple, right? You don't complicate. These markets are already complicated, right? They're already hard. They're already 90% emotional, all right? 90% psychological, right? So we don't want to overcomplicate it where it messes with our psyche, right? We want to keep it as simple as possible, right? And that's what I try to do here, right? Keep my trading as simple as possible, right? And I have a 3-step trading process, right? Step 1 is condition. I determine my bias, all right? Whether I'm going to be a buyer or a seller for the day, okay? Well, I can buy and sell in both days, right? But whether the market itself is telling me, hey, that we're in a buy program or a sell program, that's what I want to determine. Okay, we'll get more into that as to how we identify that, okay? I do it here every day anyway, so you guys should know this 3-step process already. It should be simple, right? But we just talked about the stage and execution too. I do this 3-step live every bloody day, right? I've been doing it for a minute now. It's going on to 2 years. It used to be DJ. All right, now we're building our trading floor. Okay, I'm focused on the hedge fund here, so that's what I'm building here. But I've been doing this for a while. Okay, so yeah, as you've been seeing, it's been consistent. It's been the same process. Okay, so we got step 1, then step 2 stage. What sets up your trade? What does it look like? We only have 2 types of trades: retracement setups and continuation setups. Okay, and today we actually went in depth a little bit about what I classifies as a continuation setup and what classifies as a retracement setup. Okay, what we have on the screen right now are continuation setups. Okay, all right, and with retracement setups is more of a liquidity being taken. So liquidity being taken above or below the key level, and then the market structure shift back below or above the external liquidity, depending on what the external liquidity is, right? I'm speeding up a little bit because it's coming close to the end of my my trading session. Okay, and then we have execution, right? Execution. Have your entry criteria been met to enter the trade? Have you seen everything that you need to see to enter the trade? For us here, I'm the Trader Capital. We have 4 entry criteria before pulling the trigger. Okay, so first we need time, right? Without time, we have nothing, right? We trade at time and price theory. Okay, that's why I said the 30s are fine, all right, nothing wrong. It's not as high probability as the macro setup, all right? The setup that we took was a macro setup, all right? We had time, which was 950, okay? Price was here, price was previous week's high, okay? We also did have dealing range high as well, okay? So we had time, we had price, right? And for the 4 criteria, okay, so we have time, right? We had time here, boom, check. Then price, okay? We had a key level right here, price, all right? Next, we need a swing with a displacement, all right? We had the market structure shift back below, swing with a displacement back above, right, to a market structure shift. Those are the 4 entry criterias, all right? Time, price, swing with displacement, market structure shift. And from that point, as soon as we see that market structure shift here, as soon as price trades to and through this high, short-term high here, we're pulling the trigger, we're setting our limits, okay? And that's pretty much it. And how we manage it, okay, is also part of execution. How we manage the trades is also part of our execution, all right? So for us, obviously for me, all right, I'm very heavy on the fib, all right, using the fib based on the range, all right, to manage my trades, okay? So I take something off. If it allows me a -1, I adjust my stop, okay? If I have more contract, obviously I take 2 off always at the positive standard deviations and 1 off at the negative the 0.5 standard deviations, okay? And yeah, I don't have time to really dig deeper into this. Really, I did too much yapping. And these are the 8 steps to build your edge, right? These are the 8 steps you need to, step by step, right? Step by step, follow each step individually, all right? These are the 8 steps you need to build confidence in your edge, all right? So first, understand the market, right? We talked about IPTA and how she moves, why she moves, okay? And the who behind money and how they're controlling it, okay? You need to know your model, right? As technical traders, we only need one pattern, one model, right? Once you master that one model, then you can add more to your arsenal, but always master one first, right? Okay, have a written plan. We just talked about what you need a plan for the 3 things: account, risk management, and trading edge. All right, then follow a repeatable trading process, the 3-step trading process. All right, simple, straight to the point, no need to complicate things, right? Then once you have all the 4 things, the 4 steps, right, you want to back test that model, right? You want to go back into price, following your repeatable process, all right? See, hindsight is 2020, and hindsight is how we grow and how we learn in this trade, okay? Nothing wrong with looking back in price and seeing if you see your setup, if you see your model. That is the best way to learn, to grow confident to your model, to right, to acclimate yourself to that model and be like, okay, yeah, I've seen this model in price action, past price action so many times that I can't deny it, right? I can't deny it. It's there, it works, it's repeatable, all right? Oh, I'm spitting out here. But I'm enjoying this though. I'm enjoying this as we're watching this thing do the slow rapid incline is doing over there. But yeah, back test your model, go into price action, all right? You don't need bar replay to back test, okay? When you're back testing, see the full day. See the full day. Don't try to like play it bar by bar and try to find your model there. No, that's not back testing. Back testing is you're looking at the full candlesticks, everything is in your peripheral, you can see it, you're looking at the full day, however you're trading, right? Even if you're looking at the full week, you're looking at the full day and you're seeing everything that's already happened in the day already, okay? That's how you back test, right? So back test the model, right? Then once you've collected enough data in your back testing, okay, I'll say at least 3 months of data in your back testing, then you want to forward test it in real time, right? You want to sit in front of these charts, right? Not pushing any buttons, right? Not pushing any buttons, just tape reading. You're watching it happen live in action. You'll be like, okay, so this is what my model is saying. This is what my process is doing. Here, this is what I would be looking for. Here, I'll be looking for an entry. Okay, so it's giving me the entry. I would potentially be entering here. Then you're going to watch it. You're going to watch what the price action is doing. If your model and your processes are delivering as they should, right? You're going to forward test it. That's what forward testing is. You're not pushing any buttons here. You're not pushing any buttons. You're literally just watching your model live in the price action with no emotions, no attachment, just paying attention to what you need to see in the charts, okay? And then once you've done that for another 3 months, okay? So you back tested 3 months data, right? You're forward testing it for 3 months. You're already 6 months in now, right? Now, okay? Now you build enough maybe confidence behind the model, all right? Now, once based on those 6 months of data, obviously you need to adjust and refine as you need to, as the data you're getting back is, giving you the information that you're getting back, right? You need to refine and adjust, okay? Once you get that refinement and adjustment and you're seeing consistency, then it's time to demo. When it comes demo trade with discipline, right? Following your procedures and protocols and everything that you've done from steps 1 through to 6, okay? The demo is where you get to learn more about yourself and you get to learn about your risk tolerance, right? The demo is where you want to experiment with different risk management styles to find out which one works best for you. All right, here you're doing it with no hurt to you, right? If you take a loss on a demo, it doesn't take anything from you. It's not real money. It's just demo, right? It doesn't take anything from you. So you get to learn in the best environment, right? You get to learn yourself in the best environment with no hurt to yourself, right? I think one thing that when I came into this industry, obviously I wanted to make money, right? And obviously to make money you have to be in the market trading real money. That's what I thought anyway. But no, you have to do it with no pain to you initially, right? You have to put the money to the back of your mind and just learn yourself, learn to manage yourself, learn to control yourself, learn what you're looking for in these charts with no attachments, no emotions, no like I'm gonna make money at the end of this trade, right? That's because that's how you want to trade, regardless of whether you're making money or not making money. You want to be able to be disciplined enough to follow your model, follow your procedures and protocols, follow your processes. Okay, so the demo is really imperative, right? Because that's where you get to know your risk tolerance and what you can handle and cannot handle, right? You take a 2% loss in a demo and you feel some type of way, that's telling you, that's your body telling you, hey, we can't take 2% right now where we're at right now, right? So let's reduce it. Let's try 1% and let's see how we feel at 1%. And if you can't take 1%, reduce it again, right? 0.5%. Nothing wrong with that. Nothing wrong with taking small little bites out of the market, right? Because it compounds, okay? So once you've done step 1, 2 to 7 and you've demoed with discipline, right? You can prove to yourself that you can be consistent, whether you're winning or losing, you can be consistent and you're seeing profitability still. Then you want to go live with confidence, okay? And we're going to talk about the 4 ways to, oh shit. We're going to talk about the 4 ways to scale your trading business on Thursday, okay? On Thursday, we talk about scale and Q&A Thursday, okay? And then once you obviously go live with confidence, there's different ways you can go live, and we'll talk about that on Thursday. But for Trading Edge Tuesdays, that's pretty much it. All right, that's pretty much it. These are the 8 steps you need to follow to build confidence in your trading edge. Okay, and you can't skip a step. All right, you can't skip a step. You have to go in the order right here. Step 1 goes to step 2, goes to step 3, then go to step 4. All right, then right, step 5, right. The ones where you can go back and forth is step 1 and step 5 and 6. Right. Once you hit step 5 and 6. Right, and the data that you're getting back is saying something different, you go back to step 3, right, and step 2, right, and you adjust what you need to adjust, right, and step 4, you adjust what you need to adjust, right, based on the data that step 5 and 6 are giving you, okay, before you even go to a demo. All right. But yeah, that's it for Trading Edge Tuesdays. That's it for us here. I'm the Trader Capital on today's session. We're gonna do a trade performance review and then wrap up for the day. Okay. I've yapped on enough already. But it's good information. This is information that I wish that I had when I initially started trading. Okay, and that's why I want to provide that information freely. All right, for those that are interested in this industry and on this battlefield, joining us on this battlefield. Okay, it's a tough battlefield. You have to be prepared. You have to be training each and every day, because each and every day you're fighting titans in this industry, right? The titans of this world, they're in here, all right, cannibalizing us. Okay, so we need to prepare, and we need to have our shield, we need to have our weapons ready and locked and loaded, and know what we're doing, right? Know what we're doing, so we're not just in here just swinging just to swing, right? And we're not really doing nothing. All right, but anyway, that's enough from me. That's enough from this blabbermouth. Let's do a trade performance review and see if we get anywhere with this trade. If by 11:35, by the time I'm done and this trade has done nothing, I'm gonna get out of here, and I'll let you guys know what happens to the remainder of this trade tomorrow. Okay, so you can look at it for yourself, right? You see my stop, my entry, and my exit, right? You can look in the middle of the day to see if it's hit or if my stop loss got here, right? I'm not hiding anything. All right, this is all live. All right, I'm not here to hide and be manipulative. Okay, I'm here to show you what's possible once you put your mind to it. Once you have a system and you have processes that you're following, I'm here to show you what's possible, right? I'm not here to deceive and lie to anybody. Okay, so that's not my portion. That's not me. I don't do them things. Anyway, and what I did well today is that I showed one thing for me as well before I get into what I'm doing well is that I'm doing this to keep myself accountable, right? And if I'm helping others, great, but that's just a byproduct of me keeping myself accountable, all right, and keeping myself honest, okay, in terms of what I'm doing and what I'm trying to do here, okay. My goal, as we all know, right, if you don't know, now you're gonna know. My goal is to run a hedge fund, right, and in order to be a successful fund manager, right, you need to have trust. You need to build trust with the investors, and my goal here is to build that trust, right. I'm not here to hide anything or like be manipulative about anything, right. You can see me, look what I'm doing, and if it interests you and it's something you're interested in, let's do business, right? But if it's not, keep it pushing. All right, I'm looking for the people that are looking for me, and that's pretty much it. Anyway, what I did well today is that I showed up. All right, I got 1% better, and I gained experience, learned lessons that I'll take into my next trading day, next trading session. Yeah, pretty much took a lot from today. All right, like that open range gap, right? If you have a small to non-existent open range gap, then obviously you're going to get this kind of price action, and it's not the kind of price action I want to personally involve myself in, okay? Especially if you're new, if you have less than 2 years of experience here, this is not the kind of day you want to be trading, okay? Because it does this, like, price takes so long to get to your profit targets, where usually I'm in trades for at least maximum 20 minutes, right? Average 20 minutes. But we've been here for over an hour, right? And it's just still hasn't even done nothing, right? It messes with you, right? If you don't have that much experience in pricing, if you don't know what you're looking for, if you don't know what you're doing, right? This is the kind of day that will cause you to be like, oh, let me get out, oh, let me get back in, oh, let me get out, just doing silly stuff. All right, so reminding myself yet again, right? Reminding myself, right, that this is the conditions that I don't want to be trading in either, right? Even despite where my experience is, I don't want to be in this kind of market, because look at it. Come on now. Where I fell short today, I woke up at a decent hour, I got my morning routine in, all right? Chart wise, I showed up, stuck to my model, my precision protocols. I'm very happy and pleased with myself for not like engaging in this like V shape, because look at that. The straight wick, man, straight wick, body close up here. Wicks do the damages, bodies tell the story. And particularly with that open range jack, I'm like, I'm not trying to rush into anything. It needs to be clean. It needs to be pristine. All right. And then with doing that, I actually noticed this continuation setup, because I wasn't even paying attention to that continuation setup. All right. It just kind of slapped me in the face like, oh, wait, this is a continuation setup I was talking about. I'm like, yo, this is happening right now. Let me jump in there. Okay. But it wasn't worth it for me, really and truly. This ain't worth it. Even if it does hit my take profit, all right, it's not worth it for me, right? It's not something I'm like excited about. Like, I don't care for this kind of trade, right? I want trades that I get in, I'm out, on to the next macro. I get in, I'm out, on to the next, right? So anyway, all in all, just to say, I don't think like I fell short anyway, because I pretty much followed my precision protocols and didn't deviate from it. Okay, how I can improve for next day, next trading session is keep showing up, right? Keep seeking excellence in everything that I do. Don't let short-term adversity, losses, series of losses deter me, distract me from what I got going on. Right, I got a solid foundation here of what I'm doing and what I'm looking for in price, and I just have to maintain my discipline and showing up and sticking to my precision protocols, no matter the outcome, right? No matter what the price is doing, no matter what whether I'm making money or losing money. Okay, to keep taking small steps in the right direction, all right, and eventually we'll get to our destination. Just like it's important to take small bites out of these markets, right? Not try to get your whole month's salary in one day, because you don't really get your whole month's salary working one day, really and truly. So why would you try to do that here, right? It's small bites, small incremental bites, and obviously eventually with time and experience, you can make your whole month in one day, but you're not going to start there, right? So small steps in the right directions, eventually we'll get to our destination, right? Yeah, pretty much just keep showing up, right? Keep showing up. Keep showing up. Trade breakdown. I think we broke down this trade enough already. We even have a re-entry right here during 10:30. Okay, so anyway, we established our condition as a buy program, okay, because we took dealing range buy side, okay. We came back below previous week's high. We took liquidity below it. Displacement, market structure shift back above it, giving us a continuation buy setup. All right, that's what we're in right now. Okay, leaving it to do its thing. Been in it for over like an hour, probably going on to 2 hours. Fucking hell. But it is what it is. It is what it is. All right. It's expected on a day like this. It's expected on a day like this. Nothing I can do about it though. Just go let it do its thing. all that really is probably gonna give me like one under $200. You know what I mean? Like, fuck, you know. But it's okay though. We're not outcome focused. Okay, we're not outcome focused, but it's hard not to see the outcome when you're like, oh, I waited 2 hours for that, but it's all good. I've done more for less. Okay, I've done more for less. So anything that I get here, I'm appreciative and I'm grateful. You know what I mean? You know what I mean? You know what I mean? Been here for over a minute. We're way over our session, right? My session finishes at 11:30 max. 11:30 max, but this one trade, boy, and it's not even like we took it during 10:50 macro. If I took the trade during 10:50 macro, I would understand the wait till after 11:30. But we took this during what, 9:50 macro? 9:50 macro, bro. Come on now. That is some shit right there. Anywho, let me do this thing. Let me do this thing. Let's get rid of that. Let's get rid of that. What an end. Trying to do this social media thing, man. It's so jarring, man. I hate it. It's not even social media, it's WhatsApp. I like it though, because WhatsApp is the people that have my number, right? That means I have some sort of a relationship with them because they got my number somehow. Okay? I'm just trying to be helpful out here in these streets, right? I'm just trying to help the people that I know, my power base. I'm trying to start with my power base and then we expand, all right, to outside people. Anyway, we'll be wrapping up here soon. Yet again, another reminder to myself. Oh, what the fuck? What the hell? What the hell? What is this? What is that? Trading view? I don't even know where the hell that came from. Another reminder to myself that these are the conditions I do not want to be trading in. All right? It's just a drag. It's a drag. It's a drag. Anyway, let's pick a song. There was a song I had in mind, actually. Let's pick a song for this video. Help me out. Pick a song for this video. What are you guys thinking? Oh, let's do Bad Habits. I've been on a Can't Promise rave for a minute now. My bad habit. I can't stop winning. Counting money, baby. Special feeling badass. Gotta find keys. Gotta back my haters. My bad habit. Oh, tell them, King. Yeah, counting money, baby. Special feeling. Counting money, baby. Special feeling. Hey, pockets fact, oh my god, tell me something. For that time, right now I'm balling. You bad bitch in my ear telling me I'm sweet like honey. Ah, is it me or my money? Is it me or my money? Hold on. Let me see if I get it. Nah, I can't. I would just stop it there. I'm gonna wrap up. I said it's 11:35. This is just dragging on, man. I'm wrapping up. I'm wrapping up this bad boy. We're done here. We're done here. We're done here. I'm wrapping up. Look on your own charts to see what happens for the remainder of the day. To be honest, I'm done here. Let's wrap this bitch up in a bow. Before we wrap up with this, there was a time that I would finish a trading session and still feel lost. Even on days I made money, I didn't really know why it worked. And on losing days, I had no system to fall back on. That's the difference between guessing and having a real edge. And here's the truth. Most traders only focus on entries, but consistency comes from the system behind the entry. So if you've been watching and thinking this makes sense, but I don't have the full system yet, that's exactly why I created the 10% to 1% club. That's where we go deeper into all three pillars: the full model, the risk management system, the money and mindset principles needed to join the 1% club, and the exact process to follow daily. If you're serious about becoming consistent, that is your next step. I used to think the goal was to win more trades, but the real goal is to become the type of trader who can perform no matter the outcome. Because once you have that, the results will follow. That's all for today, folks. Thank you for tuning in. I'll see you in the next AM session, kicking off at 9:15 a.m. Kickoff once again at 9:15 a.m. To be on time is to be late, okay? So make sure you show up early. As always, I'm the trader here, signing out. Good luck, good trading. Happy bloody hunting. Remember, you only fail when you quit.